Well, hello, everyone. I am Chris Martinson here, obviously of Peak Prosperity and Financial University, here with Paul Kiker of Kiker Wealth Management again. Hey, Paul, welcome back from Mexico, where you were doing some Pacific Ocean fishing, I guess, huh? Baja
Yes,
area?
it's
Yeah.
nice to be back, Chris. Good to see you again. So the Baja area, and I caught a rooster fish, not on the fly, but we did catch a lot of Dorado mahi mahi on the fly. So that was my first experience and something that I thoroughly enjoyed.
Fly fishing. I have to do that someday. I love doing that. So hey, things happened since you were gone that week. It was a busy week. It was a week where decades happened, and one of the big things that sort of landed in our community at Peak Prosperity was going through at least part of the book The Great Taking. All I really went through on that part was the part about understanding that an owner of a share, like let's say I happen to have, I can't mention any names, but let's say I have an energy company and it's in my TD Ameritrade account, which actually means it's with Schwab. And there it is. There it is, Paul. I can show you how many shares I have of any given company, and there they are. They're mine, right? Well, this book by David Rogers Webb said, not so fast. You don't actually have ownership. What you have is what's called a security entitlement. And already, as soon as I read that, I was like, oh, that's weasel wording. I know legal weasel wording here. I've been around the block enough to know that two things matter in law. Everything exactly as it's written down and the pure definition of that and how that gets interpreted through case law in the courts, and then what they didn't say, right?
Yes.
So I could not find anywhere as I dug through all of the documentation, because I have accounts with a couple of brokerages. I couldn't find anywhere in there where they actually said I own anything. I couldn't find the language. That was a gaping negative space in the conversation, right? It's like when you go to the law, the UCC, and then you go to Title 8, which defines what happens to banks when they go into a resolution process. They never once, I searched the whole document. Well, I used the search function. The word
Yeah.
depositor never shows up.
Mm,
How do you define what happens in a bankruptcy workout process and you never use the word depositor?
that's a great question.
Because
It's
you're not a depositor, you're an unsecured
right.
creditor. Right?
Unsecured creditor. That's right.
Yeah. So anyway, I just wanted to talk about that a little bit and find out, because I know, as soon as I found about this, I actually called you. You were in Baja. I'm like, Paul, we have to talk about this. Tell us what what where you're at with this now, having just a few hours of exposure to this whole thing too.
Yeah, so I spent every moment that I had internet service researching to look at the details of transfer agents, and I've got a couple of meetings scheduled with Fidelity next week to answer some questions that I have and speak with the legal team. And the initial conversations you have, it's like they look at you like, well, you don't have any issues. I'm like, no, I want to speak to the legal team that knows. So that's in process. What was fascinating to me is I've always known that, especially if you have a margin account, if you're utilizing, you put your securities up for margin, or if you're using options, you have to have that margin account, that you are putting that up for collateral that they can utilize your shares somewhere else. So
Mm-hmm.
I've always leaned towards the side that if we're on defense, because at some point, like Buffett said, these derivatives are weapons of mass financial destruction. And you did a
Right.
great job on your last educational piece
Thanks.
there, is to, okay, well, let's just do away with the margin and we'll go back to a type one account. So you're not putting that out there. So there's a lot of questions that I have, and I already have some ideas on some things that we can do to help people. I'm trying to overcome the hard part of how do you be adaptive? How are you adaptive, right? Because if you pull it out of the system and, have those shares, it's a lot harder to move, just the logistics. So if they've done this the way that book lays it out, which seems to be irrefutable, then they've made it so hard. The pain of stepping outside of that system and still being adaptive with your assets is like climbing Mount Kilimanjaro. But there's got to be a way. So we're searching for
Yeah.
that right now.
Yeah. This is going to be a process to figure this out and what the actual steps are that we can take. I mean, I can still imagine, even knowing the risks, that I would leave money in portfolio accounts. For me, this is a personal decision, right? I'm not advising anything here, simply because that represents sort of liquid working capital, right? But I could imagine other scenarios, like for instance, I do happen to hold some gold and silver in various vaulted areas, and that's a decision I've made. But the lion's share, that's under my hot little hands direct control. It's in some way, shape, or form because that's the only thing I'm. Here's the thing that bothered me the most about this, Paul, was I could never actually, and this I'm gonna ask this of David Rogers Webb when I get to interview him in about 2 hours from now.
So
Like, how
excited.
do we find out like who is the senior claimant? Like, can anybody actually answer this question? Like, so there's a pool of assets that have been collateralized, and then those have possibly been taken out and recollateralized or rehypothecated is the fancy ass term, right? And
Mhm.
on and on and on and on. So that it might be when you actually, if you could freeze the system and chain that whole ownership structure out, you might find a single financial asset actually has 10 entities that have some claim on it, right? And some
Yes.
big long. And so the question is who's senior? You
Hmm.
can't answer that. I bet you anything they can't answer that. Nobody can. It would require lawyers, courts, and time and money to figure out who actually was the senior owner of that. Because I'll bet you it's all just nebulous claims on paper. It's just legal stuff, pure legal fictions. I bet.
But and what I'm curious to see is if the custodians are actually going to take the effort to have the conversations with us, because
Yeah.
their business as usual. It's like, oh, you've got this one person's making a comment, asking some questions, and I'm sure there's more than just one, right?
Mm-hmm.
But I want to push it as far as we can push it to get those questions answered,
Yeah.
because and Dave Fairtex made a great comment on the thread from the post there. He said, talking about Treasury Direct, and if you have some assets in this great taking, if they pull this off like it looks like they've set the system up for, then you're going to have assets when no one else has. So it's incredibly important to have a portion of your assets to where it's secure as you can possibly at least do everything that you possibly can. And then, like you
Mm-hmm.
said, I agree. It's going to be nearly impossible for most people to have it completely outside of the system and spend 2 or 3 weeks trying to transfer over so you can make an adaptation in the portfolio as fast as things are moving in the markets now. So just
Right.
kind of like I've talked about 10% gold that you hold physically somewhere, that you can have access to, that's your fire insurance on the portfolio. Now, this is another area that we need to have fire insurance on the portfolio, and depending upon individuals' resources, some more than others.
Yeah. Yeah. There were some really surprising things in that book, which I've got to chase down, but he backed everything up with references. And I've gone through as many of the references as I can. I have a certain capacity for reading legal stuff I don't understand, where every third word I'm like, what do they mean by that word? And that word has a meaning that has a paragraph somewhere else where it has words in it, which I have to go search for the meaning of those words because the words matter and they use very funny uses of words in legal terms.
Yes.
So what I think a word means is not what it's defined as in the law, right? So that creates a disharmony in my understanding. So digging through it all, the part that shocked me was because I chased this one down as far as I could, and it seems to be true that they had this thing called the Safe Harbor Act, right? Which was it's good, sounds good, right? It's like the Healthy Forest Act or the Patriot Act. It's actually doing kind of the opposite of what the title is. It's just how they roll, right? What the Safe Harbor Act finally did was it removed the litmus test. If you're an entity with more than 50 billion in assets, it removes the litmus test to resolve this question, which is were those assets that just got encumbered and seized and claimed by a senior process, were those subject to fraud? There were two tests, right? One was it overt fraud, right? Did something happen? Or two, was a direct officer of the company involved in the moving of that asset within 12 months? They stripped both of those out. It's like, wait a minute. You mean there's no fraud protect? You mean like JP Morgan, to just pick on a name, could like funnel all of these assets out to Jamie Dimon's brother-in-law and then oops, magically all those assets disappear? Yeah, that's okay. That's still the senior claim in this story.
That's
It's
incredible.
actually shocking, right?
That is absolutely shocking. And one thing that we know for sure is you look at what has been done under the guise of COVID for profitability and power. imagine what they would imagine how much more power they would have by being able to take advantage of those loopholes. That's shocking.
I know. I know. So it just means it is what it is. This is how the game is set up right now. So the next set of questions, which I'm really glad you're starting to resolve, is okay, what do we do? Because I don't think doing nothing is not an option. You gotta have some sort of a response, or at least be aware of what you're facing here, I think. And maybe there's some loopholes in there. We'll get clever. Like, oh, yeah, hey, I know my shares in all those energy companies just got lost to Schwab, but I wrote options and bought the options, and so therefore I have the senior claim on those.
That would, if it's as simple as that, that would be wonderful.
So I don't know. I'm spitballing here. We'll work it out.
Well, I mean,
But yeah,
between the conversations we're going to have, your focus, the intent, the community awareness, the answers out there, and we will find it. The good thing is we're looking and have a vested interest to look, because, I mean, time could be short. And throughout history, what's classic bankers done throughout history when they were on a gold standard? You go deposit your gold in the local bank, and they loan out a whole lot more than what they have, and all of a sudden nobody has anything except for the bankers kept all their profits. So, this is just a twist on what's been done throughout history before.
true. And he had a part of the book that, as familiar as I am with this history, I did not know it or see it framed this way. But the Federal Reserve actually created the first Great Depression. While banks were failing, they didn't lend. They just sat on everything, right? And then in 1933, this was the new part of the law that this caught me. He said, notice that they passed that one of the great sins when they had to do the bank closure, and so the FDR put a bank holiday, right? And then they made gold ownership illegal because, and the text he pulls out, the text of the act said, because people are hoarding gold. Like, that's, you hoarder, you. That's why, why the economy's not working, because you're sitting on your gold and you're not spending it, you hoarder. So they forced everybody to give it to the Federal Reserve, and they did. And you know what the Federal Reserve did with it? They hoarded it. They sat on it. They didn't make loans until thousands of banks went out of business, and then they anointed the banks they wanted to keep going, and then they recapitalized the system, and off we went, right? So that was, when you looked at it that way, this was pure mob behavior. This was just ugly bare knuckle business legally. It was a great taking. Yeah.
The great taking. The great taking. Take it all and give us all the power, and you're a servant. And it's interesting because we've been hearing about, what 2030, 2030, you'll own nothing and be happy. That's all over the place.
Right.
It really puts it into perspective, doesn't it? Because, when they would say that, I'm like, okay, what about those of us that actually go through the gauntlet and the emotional stress and have the discipline to keep our eyes on the goals and the objectives and the risks, and we don't get sucked into the emotions of chasing what's taking place, with markets that will just continue to run in spite of the obvious underlying weakness. What about those of us? Are they going to take everything from us? And I guess I had a false confidence that, hey, if we're prepared and we're in the right place and we sidestep that, we take advantage of it, we're going to be okay. But according to this, you do everything right, and you still weren't in the right position. They can still take it from you. So there's a way. We'll find it.
There is, and a lot of people's brains on the thread back at Peak Prosperity around this went the same direction mine did, which is, I better rethink having a mortgage. And I know that's not an option for everybody, but because it's like, I got a mortgage at one of those tasty rates from yesteryear, and I can earn more on treasury notes right now, so it doesn't make financial sense. But I'm looking at this, and part of the book, he talks about what happened in Cleveland. So one of the Cleveland major banks was actually anointed by the Fed, and thousands of other banks closed down. So what happened was, in a bankruptcy for a bank, they have assets and liabilities. The assets, well, those get stripped out and put off in a receiver. The liabilities get wiped out. The liability, of course, is your bank account. So there were all these cases of people whose money got taken because those were the liability of the bank. The money that they had in savings got wiped out, but their mortgage, well, that was somebody's asset. those got transferred, and they ended up losing possession of their home. So think about that. I just don't even understand how there wasn't like some mass revolt and there weren't like rotary lampposts with people dangling off them. I don't
Yeah.
quite know how that didn't happen. But think of that, right? Which is that through some legal fiction, through some actions taken by people to specifically harvest your assets from you,
Mm-hmm.
they did that because it's so-called legal.
Yeah.
It's like
Well, I would assume that if it's quote legal, you've got the court system that just basically says, no, this is a legal event. You signed the paper, you should have known this, you should have read the fine print. So
mm,
we're not going to allow this to come forth because they control the system to an extent. And that's the
well,
hardest.
I'm old enough to remember, Paul, like 2009 and 10. Remember? So Wells Fargo and Bank of America both get caught in what's called the robo signing scandal, where they are forging signatures on
Mm-hmm.
mortgage documents to originate them, right? And to do HELOCs and other sort of refis and things, right? So I've seen those boxes. Those boxes say it is a federal felony to right? So they
Yeah,
committed felonies. In the case of, I think, Bank of America was like 109,000, identified felonies. Zero people went to jail for that or faced any sort of criminal action.
that's correct. That is correct. And that's the greatest sin, I think, coming out the other side from our leadership and our justice system is there was no justice. It was like they took leaps forward in their power and their ability to gain control over the people during that period of time because and then you have small local banks. I mean, in our local area, you had our small local banks were taken down, and
Mm-hmm.
in several circumstances they needed to be taken down. They had poor leadership, but had they given the requirement, okay, you locally, you replace those leaders, the managers of those banks, you replace that board. We're going to backstop them just like we did the banks that we hand over to from former regulators. Then our local community banks would have been able to survive and thrive. But that doesn't give you centralized control at an entity far away or a city far away, because the more centralized that control is, the more they can say, hey, I don't like that little area around Chris. I don't like that little area in North Georgia there. These are conservative people. They're standing up against us. So let's just shut down the lending in that area. And because we're such a debt-based society, then that really limits the economic growth and opportunity. So they have the ability in central planning to be able to squash little areas. I mean, maybe I'm going too far down that rabbit hole, but that's what I see as the end game, and local managers with no power versus a community bank that has the vested interest in your local community.
Yeah. Yeah, no, I totally agree with that. And of course, this now finally connects that dot for me where I understand, oh, this is how the central bank digital currencies get introduced, right? There's a great panic. Oh my gosh, Paul, it's terrible because reasons your local bank is now frozen. We're so sorry.
Mm-hmm.
However, because we're very noble people over here at the Fed, what we're going to do is we're going to offset your losses over there in a new central bank digital currency account. Just pull up your phone, accept the T's and C's, and you're made whole.
Yeah.
Only now they actually have the power, right? The power, which is they don't have to shut off the bank in a whole region. They don't like you because you tweeted out a mean tweet that made fun of Jerome Powell, and next thing you're under their control. So this whole thing has always been about control, right?
Mm-hmm.
And so this is why it's so important, I think, to be talking about this, because that sets the frame. And it honestly, I get it. It makes me feel really anxious, and I hope it's not too alarming for people, but it is what it is. Here's my belief, Paul. They have grand plans and they think they can just sort of keep going this way, but they haven't been in touch with real work in a couple of generations.
That is true.
And they don't know how the world actually creates value. It just sort of arises because of their genius, legal fictions. I'm worried that they break the system. And that's why I think that, if people can, whatever wealth they have, they've got to protect it. They've got to make sure it's managed really well as best we can, given these
Yes.
circumstances but I think people need to understand we're at the end of a what I'll call a grand credit super cycle.
Yes.
It's a big long one. It started right around August 15th, 1971, but that was the final untethering. we've pretended with this fiction that we can just expand credit forever. We can't. It's a math
No.
problem. We've discussed that before. So the question becomes, what happens when a super grant, credit super cycle ends? And I think it's as simple as this. You either own or own pieces of productive assets, or you don't.
Mm-hmm.
Why has Bill Gates been buying up so much farmland? They just try and like voice that off like it's just like haha, it's a rich people thing,
No, I mean, farmland has been profitable, but not as profitable as your Magnificent Seven stocks. So there's a reason. Yeah, you could say diversification, but why would you walk away from one of those, the best performing stocks as the largest holding when you're that connected with the company? Because, right, as a business owner,
Mm-hmm.
you know that company more than anybody else does. But years ago, he started purchasing farmland. Well, I mean, that's the most productive asset that you can own. Manufacturing facilities, the most productive assets that you can own. You own that, you own all of the future income, the dividends that can be generated off of them. So
Yep.
yeah, it's about control. It's about control.
Yeah.
And going back to the mortgage, though, the one thing that I do encourage people, yes, there is an arbitrage between 3% mortgage and 5.5% treasuries. Yes, you can profit from that. That is a very shrewd decision to make. However, if it's first by inflation, then by deflation, we will rob you of all your wealth, because basically that deflation would have to occur, correct? So that these institutions collapse, they're bankrupt, and then they've got your collateral wrapped up, so they grab it all. If you do believe that's a concern, is it really worth the spread that you would get between that 3 and that 5 or 5.5 to carry that risk, especially if you have enough other assets that can produce income for you? And that's where we have to be careful that if we're seeking wisdom, we need to invest and make decisions to be financially sound with the most solid foundation that we can, because when that earthquake comes, we need as much of an earthquake proof foundation we can.
Yep.
Having that mortgage paid off, being out of that system, and having that title in hand, which you're still going to have to do other things, as you talked about yesterday, to give yourself every potential possibility to put you and your family in a position to, one, where you're okay, two, hopefully you've got assets when other people don't, so you can be a kinsman redeemer and take advantage of the opportunity, so that hopefully the wise can gain more power to be able to combat that system, because they're, that's the important part of this, is to try to make a difference in the future and make our families and country a better place.
Yeah. Yeah. The reason I know that we're over the target with this conversation is that when my most poorly performing pieces on Twitter, elsewhere, is when I directly contradict or otherwise cast aspersions upon the Federal Reserve. They're a little, let's say they're just a little thin-skinned about that one topic area. And so I was just scanning to the side to see if I had the slide up on this deck I've got over here, but I don't. But remember, I showed just what the effective federal funds rate was for 25 years, and there's 15 years, Paul, where it's basically zero. It's less than 0.25%, right? That I call that monetary vandalism, right? But that gets everybody herded into this box canyon, right? So let's just think about regional banks, right? So March of 23, Silicon Valley Bank, SVB, goes down, some others, right? Signature, et cetera. So how did they get in trouble? Well, they got in trouble because they made a bunch of loans, but their capital was stored over here in these sort of really low yielding treasury bonds, right? What did we get down to on the 10-year? 0.56% or something?
I think
ridiculous.
It was a ridiculously low number. I've got that over here somewhere, but it was a ridiculously low
Yeah.
number.
So your SVB, you got some 10-year treasuries on your books. They're hanging out there, and the Fed forced you to take those at that place, right? Then, oops, surprise, 10 years are now yielding 4%, right? And all of a sudden you have a run on your bank that comes from somewhere. People are like, we'd like our money. And you're going to be taking probably a 20-25% haircut if you have to sell those 10 years at that new rate of 4% when, you bought them at 0.5% ish, right?
Yes. Yes.
And then, oh, the dust settles and we find out, oh, surprise, JP Morgan, acquired SVB, right? Took the assets.
They were ready and took advantage of the foolishness of the leaders of SVB. Oh, and SVB happened to be involved in the crypto industry too. So that was a win-win, correct?
Correct.
Yeah.
But it's presented as if, oh, these regional banks they're just not safe, right? But this was, when you strip it back, this is the Federal Reserve. Their policy forced this yield chasing behavior, right? And so we had junk bonds yielding a 4 handle, meaning a 4% zone, right? Which is just just no, we're not being compensated for risk. So they forced everybody into things where you were overpaying for assets, and then they reprice those assets. Now that sounds, they're saying, oh, look at this inflation, because you mentioned this, your phrase kicked it off for me, that I think it was Jackson's term. The
Yes.
process of deflation, though, what those banks were facing, and anybody who was holding any of those underwater, those too expensive assets, that's deflation, right?
Yes, it
I had
is.
$100 billion worth of bonds that are now worth 80 billion. I just poof, 20 billion deflated, right? It just disappeared, right? But it's
Mm-hmm.
an act of policy. It's a policy. I was screaming about this the whole way through, saying this is going to result in trouble. Like, this is how we get in, but it's not trouble. If we look at it from another way, this is not a bug of the system. It's a feature.
Mm-hmm. Well, and the book really puts it into perspective. So you think about in warfare, there are so many psychological aspects to go to warfare.
Mm.
But you want to, if I was to go to war, and I'm not a general by any means whatsoever, but I want to put the enemy, if I can drive the enemy into an area where it gives me the greatest advantage and them the greatest weakness, and especially the more patient you are, Sun Tzu, Art of War, everything that goes there.
Mm-hmm.
That's a planned event. So when you look at this and you think about the Great Reset and everything else, it's like, this is really, I mean, we're the enemy and they're coming after our assets for control. It really changes the perspective when you look at it, because for the longest time I've thought, well, this is just foolish human behavior. You've got a lot of individuals that are in charge that don't understand history. They're caught up in what's going on. I want to look more impressive
Mm-hmm.
in front of my friends here. So it's all about a power and greed grab that takes over. But this really puts an evil intention on top of what I and my optimism hoped was just foolish human behavior. The Great Sea Bubble, the South Seas bubble, the railroad bubble, the housing bubble of 2007. Now we end up in the bubble of everything. And just like those banks were herded into those assets from an asset management standpoint, we'll have to participate in assets from time to time, because that's just the momentum. And for 3 or 4 or 5 years, there may not be anywhere else to go. But if you understand the risk associated with it, as soon as you get those fractures that are around the corner, I like to use the grandma's cookie jar analogy. You walk into the kitchen.
Mm-hmm.
My grandmother could not stand for you to eat a cookie before she fed you. So, you walk in there, you don't know if the creak coming from the other room is her walking in that direction. So you pull your hand back. If she's in there, gorge on the cookies all you want. You're going to get in trouble when the cookie jar is empty, but at least you participated. Managing assets has to be the same way. You pay attention to what's coming your way so that you can try to protect and play the game, but also, we have to play the game by the rules that are forced upon us, unfortunately. But also be wise, step and protect. It completely, it makes the stakes a lot higher.
Yeah. So maybe this is just what happens late stage, sort of like, end of the credit cycle, super bubble, everything bubble kind of a moment. Maybe, but you said an important thing in there, which is, and I felt this acutely, which is I feel like I'm the enemy here of my own country. So that means that there's somebody, I'm in opposition. Like, we're not in this together. We're not trying to make the world a better place, and we're not playing by a fair set of rules, so that we can leave behind a better world for whoever's next. I feel like these people are just bottomless, greedy,
Mm-hmm.
bottomless,
Yeah.
right? And so, I have a frame. I could look at this and I could say, okay, this is the kindest I can be. I'm not going to get all biblical here. I'm just going to go about, it's just money, right? Hey, it's nothing personal. we're Monsanto. We're just going to poison everything because we make money at it. It's nothing personal. We put your grandma on a ventilator and killed her because we made more money doing that. It's nothing personal. It's just if, whether it's Raytheon, I mean, the whole thing is just money, just money. Now, my grandfather was a banker, and so is my uncle, and I still have people in the bank, and his father, like this goes way back.
Yeah.
And when my grandfather died, the town in Canandaigua, upstate New York, it was packed, 1,000 people trying to cram into this thing because he knew everybody. He made loans based on character, like that. Like it was a integrative part. And so he retired a long time ago. But as I started to become aware of financial markets and talked with him, he didn't recognize anything anymore, right? He didn't understand what the world had become.
Yeah.
He served under Paul Volcker for 3 years at the New York Fed. Because they have rotating positions for regions, right? So he was there for a bit. And I'm not going to pretend he was some deep insider, but back then it was actually a legitimate. They were trying their best to be part of. They were a part of society, not apart from.
Yes.
They were integrated. They weren't parasitizing it. They were improving it, right? Something very bad went off the rails in the last 20, 25 years, I would submit.
Well, and I would agree too. You go back and you track all of our problems into the early 70s with the Bretton Woods situation. You gave the date earlier. I can't ever remember the specific date, but it's a slow creep forward, and those who know what are taking place surround, put individuals that are like-minded like them in positions of power. And it goes back to, like, I was having a conversation with a good friend physician here recently, and he's finally woken up to what you've been telling everybody for some time, and he says, I just trusted the wrong people. So they take advantage of all the individuals that are wanting to do good, but they never make it to the top because they're not like-minded like those who want to take control. And like your grandfather, I mean, being a banker and being a prudent, wise, and a man of integrity during that period of time, and telling people, no, look, your character's not good enough to loan on, because I'm loaning money for the whole community that have deposited here. They've loaned me this money so that I can loan out to you to make the community a better place. But yes, this individual needs to be loaned upon. That was that community and relationship. That doesn't happen in central planning. Central planning is so detached from the average individual that they meet that it is just business. And what amazed me about the book that he talked about is how little oversight and how few people were involved in the making of these decisions. There was really no oversight. I mean, did I miss that, Chris? Did you see the same thing? There's no oversight.
Two dudes, two guys wrote all the relevant case law, I think, for this stuff.
Yeah. So unbelievable.
It is. So I'm flabbergasted. It's hard to flabbergast me.
It is.
I was like, anyway, well, I'll talk to him about it and see what more can happen from that. But it did sharpen for me this idea that okay, we're gonna have to figure out what our responses here are. And for myself, I think it's a game in essence, right? So if legal bulwarks help, I'm thinking about all kinds of things, like, what do you do with your mortgage title? Do you slip it over into the other parallel structure called the allodial title structure? Do you investigate putting houses into trusts, irrevocable trusts? Would you double layer that? Could you think about a private membership association as a third layer? Is there some way to invoke religious exemptions and protections? Because there are still some. If it's all about the laws, might as well just put, not that it'll matter, because we've seen this, right? You're only as safe as the judge you get in front of.
That's right. Yeah.
Some are sympathetic, some are hostile. What you can do.
That's right. And depends on what your circuit court is in the area too. So, one thing I was thinking about, they always give you a way out. And that's what I'm wondering as I go down, as we do this research and start discovering the conversations with the attorneys and the brokerage houses. You mentioned putting a house in an irrevocable trust. So if you place that house in that trust, the trust is going to inherit the cost basis you have on the home. So you're going to lose when your heirs earn that house, that stepped up cost basis. But it also protects it from credit. There's so many other benefits that go there. So the very wealthy and those that are connected utilize those all the time.
Mm-hmm.
But the average individual has been so taught, driven, funneled into the thought that, well, I do not need to pay those taxes, right? I mean, because that hurdle for most people, because they do not like paying taxes, they don't like how it's being, those dollars are being spent, they disagree with
Mm-hmm.
that, is enough of a hurdle for the average person to not understand the big picture importance of taking and placing in that trust. So there is something that's going to have to be given up, per se, to be able to be prepared. But that's what sacrifice is. We get up and go to the gym. We do the things that we save today for the future. We've got to have that
Mm-hmm.
fine balance of making sacrifices now to make sure that we have a solid foundation in the future.
Yep. Totally agree. Well, can we turn in our last few minutes? Anything in the markets catching your eye as you came back and scanned?
Yeah, I was keeping up with the markets last week when we were gone. I mean, this rally over the past couple of weeks has just been, or past week has been fast and furious. The question is it a short covering rally? What I thought was interesting is something that I've seen before is, just a basic technical fact. The NASDAQ closed below the 200-day moving average, and then we pay attention to the 200 EMA, which is exponential moving average. And then all of a sudden, we had this massive reversal the other way. It really forced a lot of active asset managers to move into a principal protection mode. A lot of individuals raised cash. And all of a sudden, you get, I saw a headline that came across the Twitter feed and a few other areas that says, oh, Zelensky's ready to negotiate. So it's like, oh, okay, well, all of a sudden, if the war in Ukraine's over, then we're off to the races, right? And then you've got oil that has completely wiped out the war premium here in the recent period of time, and interest rates revert. So it took the Fed, most of this year to convince the markets that we're going to stay higher for longer. And then in a matter of 2 weeks, the market's like, we don't believe you. We're going to, redeploy capital, because you've got this major concern about a year-end rally. You've got 7 stocks that have caused this market to be up for the year. The other 493 are basically even, if not down, depending upon the day that you look at it. So asset managers, investors, it seems like there's frustration for everybody. Your long-term bulls, the market has not broken the highs from 2 years ago. Gold's basically at the same place that it was 2.5 years ago. You got treasuries and bonds that are down substantially. So this is a very frustrating environment for everyone. And here now, this fear of missing out is a pretty big deal. And I cannot say that this may be an initiation rally that carries into the spring, right? I mean, maybe it carries into the end of the year, but the question is, is it sustainable, and what are we going to see early next year? So this is a very tough time. We're at least out of the danger windows, per se. We've got a little bit of economic data. I'm curious to see what the market's going to do between now and next week, because really what the bulls need is CPI to be flat or down. And if CPI is flat or down, then that's the fuel to say, hey, we've got this Goldilocks situation. But it really looks like inflation is entrenched and sticky. So we'll find out a little bit more next week how this market's looking. Now, we're seeing some deterioration in the fundamentals under the market. John Husband has been screaming a lot here recently about, still potentially being in a trapdoor event. And he is unbelievably articulate explaining this, just
he's a good egg, that one.
Oh, I loved it. Every time he puts something out, I'll read it 3 or 4 times, and I usually pull a dictionary out once or twice just to make sure. I've learned over time, but he's so articulate, and he's so he lays his argument so well, that this is a period of time where the internals of the market are iffy, and things could turn on a dime. That year-end rally may not necessarily come to fruition, even though that's what most people began betting on a week ago. So the market's cleared out. We should consolidate.
Go ahead. Because you made a great point before, though, that things don't get serious until the Fed starts cutting rates, right?
Yes.
know.
Yes.
Yep. And there's a little lag there. So it's something I've been tracking because I don't believe the Fed sets rates as much as it follows the market. And the part of the market it follows is the 2-year. And so I was actually getting a little, let's see here. Let me know when you can see that. Is it up?
I can see it. Yes.
Yeah. So I was watching the 2-year really start to trundle down here from middle October. And here on the 3rd, of November, I started to get concerned. And now it's started to go the other way a little bit. So I'm not as sure, but I thought this might have been the beginning of a turn because that was a 28 basis point move when the Fed was still holding pat and talking higher. And the 2-year was calling BS on that and actually wandered down more than a quarter point. So I didn't know what to make of that. And it hasn't wobbled up a lot since then. So that was a low of what, 4.8 something, 4.83 maybe. So we're up what, 10, 13 basis points from there, but we're still not back at 5%. I don't know. I don't know. So there's no clear signal yet to me in this story. We got shipping is down. They had to revise every employment number down, of course, but the BLS is putting the BS and that acronym.
I know what the BS is for that.
I don't know what to make of any of that stuff. But it just, if these high rates have to be doing some damage out there. They just have to.
They have to be. And so one of the things we're seeing is your average purchaser of a home. There's a lot of sales falling through. The local real estate agents I'm talking to here, even some of the local real estate agents I talked to in Baja, Mexico, so Todos Santos is on the Pacific Ocean. You're wealthy or having no problem right now. But housing is priced at the margin. It's kind of like stocks, right? So if you only have 2 transactions in a year and those prices are higher, that holds those appraisals up. So once housing starts dropping on the margins, if it does, and a sale falling through is not necessarily a lower price. That's not something that's going to hit the appraisals yet. So we are starting to see damage. Real estate agents aren't making as much money. New construction still going along, but there are cracks at the seam. And the optimism, because this has taken so long, I mean, just the sheer amount of money that the government printed during COVID and the emotional impact that put into people just kind of spending tomorrow. Borrowing money is only pulling purchase in the future forward till today. So at some point, you're going to run out of that forward future that you can pull forward. Higher interest rates are starting to wear. Car prices are starting to settle down a little bit, not as fast as everyone anticipated. So the trajectory of a slower economy has not abated. It's not accelerated like we thought, like a lot of people thought that it would at this point, but it's still slowly, persistently continuing. And these interest rates the lag effect should really start kicking in about now till February, and we really see where we are. So we're by no means are we out of the woods yet, no matter how optimistic or the market's panicking to print good numbers for year end. But the real investors are paying attention to where we're going, not just the year January 1st, December 31st day.
Yeah. I was on a panel last night with a number of people. 2 of them made a really interesting pair of points about real estate. One of them is Jason Hartman. He does a lot of real estate investing. The other is Joe Brown, who was doing a lot of sort of macro analysis. And together, it was an interesting point. So Jason said he's not surprised by house prices holding up, even though mortgages are high, because you have this problem, which is that people can't afford these new houses. That the housing affordability is like stupid low. So they're not building a lot of houses because new houses, it's really hard to get people to buy stuff they can't afford. Right.
Right.
But the people who have houses, they have no incentive to let go of those houses, because if you're holding a mortgage at 3 and you got to cough up and dive back in at 8, it's really hard. And then Joe Brown made a really important point. He said, it's not the decision, do I rent or buy, based on how much a mortgage costs me today versus how much renting costs me. You have to compare the cost of renting today to the mortgage you actually already have. And for 113 million people, they have mortgages under the current rate that they would have to pay in terms of renting. So it's just really froze the market. So there's not a lot of supply. Right. And like you said, if only one house sold in all of America, that would be the median house price,
Yeah, that's right. Well, and the question is, everything is frozen, and those are really good points, very articulate. So everything is frozen. So at some point, you get this break. That doesn't necessarily mean it breaks up or down, but a breaking, and it becomes unfrozen and transactions start having to take place. And the question is, when is that going to be? You know, that momentum is still there, kind of frozen at this point. So this is a slow process. It's still a very dangerous process. Just because it's slow does not mean that it's not even more dangerous right now than it was before. I think
Well, you know who I feel bad for? I feel terrible for people our children's age. Because if you want to try and start a household right now with interest rates at 8% for a mortgage and very little housing to pick through, that's way overpriced, deeply unaffordable. Again, this is an act of policy. The Federal Reserve has said, screw the younger generation. Like financially, literally, because we feel like rewarding these other people instead. Or I don't know what their game is, but I don't think they should be entrusted with that level of omnipotence in this story. They should not be able to choose which generations win and lose. That's totally unfair. Just not right. Full stop.
And I think one of the problems is the baby boomer generation just doesn't really understand what the younger generation is facing.
I agree.
And the reason I say this is about a week ago, I was sitting around having a conversation with 3 or 4 men trying to, I was bragging on a younger individual we've been trying to mentor, tough situation, try to head in the right, help that child head in the right direction. We got to talking about the generation, it's like, well, they're complaining, they don't want to work, they can't, they don't save enough money to buy a home. And I listened to this conversation go through, and then I started challenging them. I said, okay, when you came out, your savings had purchasing power. When you came out, there was all kinds of opportunity that was out there. So yeah, those who did not work in your generation did not do well. Those who did work did really well. But what incentive does this generation have? If you really listen to what they're saying, yes, there are those that are lazy. They don't have quite as much work ethic as what the baby boomer generation does, but that doesn't mean they're all that way. There are very limited opportunities, because unless their parents are wealthy enough to pay for a college education, and the cost of college has gone up so much because of the ability to loan, and the colleges can charge pretty much what it want to charge. It's all supply and demand. As long as there's somebody willing to loan, and prior generation college education made all the difference in the world, and now you're coming out of school with all of this debt, and salaries have not kept up with the cost of living, especially since the 1990s. They're just constantly disheartened about the world, and they don't know what to do about it. And a lot of times what people will do is they just give up. And it seems like that's what a lot of this. So after that conversation, those individuals like, well, I never thought about it from that perspective. And I think if we look at it like that, the system is broken for that generation. There's just not much opportunity for them unless they're really connected in their families or have families that can make that burden easier for them. We're not going to see the work ethic out of them. Most people want to get out and work and get fulfillment out of what they do and make a difference in life. So, maybe I didn't explain that as well as what the big picture looks like, but I think that is one of the problems with this generation, is just lack of opportunity. The American dream is to get out, buy a house and start building and be able to go on a vacation. And what is it? I think it's 114 unusual wells put out yesterday. It's 114 or $15,000 per year in household income that you have to have to be able to buy a home. And that's only about 15% of the population.
Yeah. Yeah. One of my least favorite people in all of bureaucracy is Janet Yellen.
Oh my God, too.
She's in Texas, they would call her a post turtle. And a post turtle is, you see a post and it's got a turtle on top, and it's just its legs are waving in the air, and you say, well, only thing I know for sure is it didn't get there by itself. No. She's a post turtle. She's just up there waving her legs around. But a few years ago, she put out a position piece. This was in the context when she was still as chairman of the Federal Reserve. And she said, well, there's 3 great paths to achieving prosperity in the United States. And one of them that she put out there was you inherit it. And I'm like, you lousy human being, right?
That's horrible.
Yeah. said, oh, you start a business, you get educated, or you inherit it. I was like, because at the time she was busy making sure that people who had inheritances, those were exploding upwards because of the financialization. The Fed was printing money, and through the process of seigniorage, they were handing it out to Wall Street. And surprise, the top 0.1% was getting stupidly wealthier, as a direct consequence of her policies. And then she said, oh yeah, if you really want to get ahead in America, one good way is to make sure that your family's already wealthy. Like,
That's insane.
You post turtle, and that's as kind as I can be.
Well, that's her perspective. But bringing her up reminds me of Stanley Druckenmiller and what he recently stated. And I really didn't think about it until I heard his statement that it was criminally negligent, basically, that our Treasury Secretary did not lock in longer term rates. You had Austria sell what, 100-year bond, and I remember thinking that at the time. But you get busy watching the markets and everything that's taking place. And then the more I've thought about that, she had a once in a lifetime opportunity to take our nation's debt and lock it in, because if Austria could do it for 100 years, what do you think the United States could do for 100 years? Of course, more bankers probably would have blown themselves up, but lock in that debt for a long-term period of time. That is a good fiduciary decision to make for our country. Now, in my position as being a fiduciary for clients, if we had a family office and somebody hands me the funds and leaves for 2 years, we have to manage that for their interest. We would have taken advantage of locking in, right? If you lock in those rates for a long period of time, if we had to borrow those funds that are out. So it goes back to that parable of talents in the Bible. 2 of those managed them well, and one, out of fear of their master at the time. But this is just pure neglect. I mean, hopefully we'll see some consequences, but it seems in today's society, they're protected. I think their day will come at some point. I hope. I still believe that there's justice in the system. I'm optimist. There are people at some point. Hopefully we will see it. Hopefully we will.
It's a great point. And again, from this panel last night, Joe Brown made a point. He said, all those the repos, remember, they're hitting $1.5, $2 trillion, right? So it's like, what is happening here with these overnight refundings? And that's been whittling down. And so he said somebody explained to him that what's happening is that those are slowly getting whittled down because they're either earning 5-ish% off of the Fed, but they can get 5.3 off a short-term US paper, right? So they're taking that, 30 basis points is a lot when we're talking $1 trillion or $2 trillion, right? So all that repo money is coming out, and it's down to about $1 trillion now. It was up as high as 2. And he said when that goes to 0, that's when the Treasury Department will now flip over to the longer end of this story, because right now they're just feasting on that money, harvesting that out on the short end. Again, super neglectful, absolutely incompetent. They're doing it because it's easy. They're doing it because they won't run into any treasury failures. They're doing it because it won't pop the long end of the curve, which they're afraid of, because that drives mortgages. It's an election year. So for not good reasons, they're busy harvesting all this excess money that the Fed printed and handed out to the banking system, which then round tripped it back into their excess reserve funds accounts, which the Treasury Department is now siphoning off in their infinite wisdom on the short end of the curve. So when they do have to refi that, it's going to be under much higher terms, guaranteed.
Absolutely.
Could be wrong, but don't think so.
Well, and unless the Fed continues to push and breaks the system to artificially drive rates lower so that they can take advantage of that, of lower rates to lock it in before we have the next major wave of inflation. But what does that do to the average American that is in modern portfolio theory, doesn't have a risk managed portfolio, is going about their lives, and then the markets go down 30, 40, 50% so that the Fed can cover up incompetence on the Treasury Secretary. I mean, maybe I'm reading too far into that, but
all this is solved with sound money. If we could just get sound money again, it balances itself out. We don't need all these legal terms. We don't have to figure out who owns what and fictions and all that stuff. And I wish we had sound money. I'll tell you why. It's been galling me, Paul, to watch my government, through the Team Biden and whoever his handlers are, saying, here's another 100 billion. We just need another 100 billion for some country out there. Okay. For war, we're going to blow it up because that makes sense to us, right? It doesn't matter. They don't need 100. It's like, it's costless for them because they just siphon that out of the future. I want sound money. I want my president to say, look me dead in the eye and say, I'm going to have to raise your taxes by 6% next year because I want to send that to Ukraine. And I bet we have a different conversation, which would be appropriate, right?
Yeah,
Is that
exactly.
it? Is that the best use of that money today, or should Detroit have lead-free water? Or is that last Metro North trip I took a real embarrassment? We should maybe upgrade some of our decrepit infrastructure here in the East Coast. I don't know, right? Let's have the
Absolutely.
conversation.
Absolutely. And then the American people have a vested interest as well, instead of it being disconnected. And slow consequences do not mean no consequences. Too often, slow consequences mean much more severe consequences. And it would force the
Yeah,
American people to be educated and know about it. So I'm with you. I really wish we were on hard money. It was a much better
yeah,
time back then. Quality of life was a lot better.
I agree. I do agree. I mean, it's not easy. Life's not easy, never is. But at least you have a stable footing that you can
Mm-hmm.
begin to plan on. So well, with
Right.
that, Paul, so good talking with you again. This is, of course, Paul Kiker of Kiker Wealth Management. If you have any interest in, and you do, I'm sure, talking with a financial advisor who gets how you see the world, please go to peakfinancialinvesting.com, fill out a simple form, and Paul and his team will get right back to you. And everybody who's gone through it so far, Paul, has just been singing praises, saying it's just what a breath of fresh air to be talking with you and your team. So
Thank
thanks for
you.
doing that.
We've thoroughly enjoyed meeting just some of the best people I've ever met. So thank you, Chris. We're so excited to be able to help.
All right. Well, good. Well, I'm going to prep up for my next interview. It's going to be fun. And we'll see you next week, I guess. All right.
I can't wait till the new interview comes out. So thank you, Chris.